right, guys. Well, listen, thank you very much for coming out today. I'll give you a little background of what I've done and how I got back into the real estate market. So I owned the largest insurance firm in Florida. I sold it, and then I started dabbling into real estate. I had a title company. I was seeing the title guys that were, not the title guys, the investors that were closing with us make more money than we were at the title closings. At one point I said, you know what, I'm gonna get into this business. I did, and it went very well for me. After my real estate business, I got into project developments. I did 2 project developments, which we sold our projects and we sold our companies, our brands. And then about 10 years ago, I wanted to get back into real estate investment. I kind of wanted to like revamp myself. And I started looking online. I came across STRIA and I got involved, started taking the classes. So I'm going to tell you, I am one that's not only telling you the story, but I am a testament that I started here 10 years ago to revamp my knowledge of how the market changes. Because don't we agree that the markets change every minute? All right, so education is very, 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 very important, and you're going to get it here. So you've heard a couple of options in financing. I think there's great options out there. What I will say, guys, you got to decide what route you want to take, what bucket you guys want to get into, because as you heard, I'm sure you've heard some new materials that are foreign to you, and it's okay. Because there is a lot of materials. There's a lot of different moving pieces in this real estate world. Some people do Airbnbs, some people do commercials, some people do flips, some people do assignments, some people do hard capital, some people raise capital, which is what I do. All right? So there's a lot of different places that you could put your money into this business. You just got to pick which one's going to work for you, which is the one that you relate to. And I stumbled into a little secret in the financial world while I was getting my SEC license. The financial world, guys, let me tell you something, and I would say this. I don't know how many of you have heard of self-directed IRAs, all right? But 10 years ago, when I was exploring and I was getting my SEC license, I was told that I had to surrender all my licenses, and I hold 3 licenses under our umbrella. I have my broker's license for lending, I have my real estate broker's license, and I have my insurance broker's license. So we have our hands in a lot of different pots. But when I went to one of the big firms, they said I had to surrender all my licenses. There was this thing called sell away, which meant that if I worked for one of the big firms, whether I was managing assets for a publicly traded company or a private company, and there was a tax liability, listen to this, there was a tax liability, I couldn't tell my client what to do because it was considered selling away, and I would lose my job. So I said, you know what, I'm not going to do this. I'm going to figure out the puzzle here. And I did. I did. It took me a long time to put this deal together. So let me tell you what I did. I went looking for the #1 CPA in the country. And I hired the #1 guy that worked for the SEC. And I told him, look, there's a problem here. Why is the financial industry, the financial advisors and CPAs creating liability once they cap the qualifying counts of 401s, defined plans, and defines over defines, and actually leave a tax liability on their taxes? He says, well, because that's the IRS code. I said, I know, but this is what the IRS code says as well. So why aren't they doing it? Well, I'll tell you why they're not doing it. Because it's called selling away. They can't tell their clients, hey, you have a tax liability. We've capped out your 401. We capped out your defined plan. Goodbye, you owe $500,000. So as I started exploring this, of course, I said, well, who makes money in this world? For the most part, the guys that make the big money in this world are doctors. Yeah, I mean, I don't know. I don't have one doctor client that makes less than $1 million a year. So I said, I'm going to tap into these guys. So I got involved in the medical community. As I started researching their taxes, I saw a lot of liability. My average doctor was paying $700,000 in taxes. Just a little. Who needs it? He's making $3 million. He's a neurosurgeon. What's $700,000 for him? No, that's what the financial world was saying, right? Then taking your money if you are post-retired, or, very important, it has to be a private 401 or an IRA, because you can't do it inside of your institutional 401, which means if you work for a firm or a company and they offer you the 401, you cannot do that. It has to be a private 401 or an IRA that you privately own. And you could do everything Carlos tells you. And I'll tell you, that's where your money is going to work for you. Okay? So let's talk about lending. You know, I started a company 20 years ago when the real estate market dropped. And I wanted to figure out why so many realtors were dropping off the map. They weren't renewing their licenses. But of course, if you weren't closing, the market dropped. Nobody was closing deals, and you're a realtor. Well, you have to go find a real job, 9 to 5. So I said, you know, how can I create stability in the real estate business so these people could stay in the actual business? Which I use that practice every day. It's called leveraging. You see, we leverage every day, but we leverage the wrong things. We go buy a car, we use financing. We go lease a car, we use the financing from the leasing company. Anybody have credit cards here? All right, that's leveraging. You don't have the money, or maybe you do, but you'd rather use the credit card because they're giving you a 0% for 5 months, 10 months, 6 months. I don't know, but you're leveraging yourself already. Right? You're leveraging somebody else's money to make them the money. Right? So the way I lose leverage is I leverage with other people's money and private investors. Okay? My private investors, 9 out of 10 are doctors. And out of all those, I only have one, which is sitting in this room today, which I met in a seminar, that actually has a self-directed IRA. So imagine that. 9 out of my 10 clients that are sitting in $20, $30 million, maybe $100 million, are paying huge tax liability, are not doing programs of self-directed IRAs because their financial advisor and their CPA tells them it's illegal. It's not under the IRS code. I've kept the IRS away from you. Guys, let me tell you something about these programs. When this program was set up, it was set up exactly at the same time that the 401 and the FAM plans were put together by the federal government. The only thing is that these plans, 20 years ago, were only available to the 1%ers of the world, the ultra wealthy. It is now that it's becoming more popular. Now the financial markets are starting to talk about it. Does anybody know who the largest financial firm is in the U.S.? You don't have to say. I'm going to tell you who they are. And I'm going to tell you how they became number one in the business. Anybody heard of Blackstone? Okay. Yeah, they're heavily in mutual funds, municipal bonds, hold a huge portfolio of assets under management for people's retirement. But their money came in real estate. And they're heavily invested in real estate. Okay? So if it works for them, you think it could work for you? Absolutely. Okay? So listen, so you guys are already using leverage. So why not leverage into an asset that's going to make you money? You don't have the money? Figure it out. Find someone. Call your friends. Call your associates. Call your cousins. Put the money together. All right? Figure it out. Leverage. Get a private lender. Leverage it. You don't need all the money, but you need a little bit of money to get going. Okay? By the way, I wanted to make a disclosure. Guys, I'm not here to sell you anything. I'm an advisor. I'm a consultant. I don't sell anything. I'm here to tell you just how it works. You got to work. And you got to be crazy. Anybody knows who Steve Jobs is? Right? Everybody knows who Jeff Bezos is? You think those guys are normal? That don't go to sleep? that are creating technology that's beyond our wildest imagination. You think those guys are normal? That is the intensity you got to have to succeed in anything, any career. You got to be insanely crazy to succeed. And that intensity, you have to bring it into this business. There's no shortcuts. I could tell you that if there was one piece of information I'd like to share with you here today that I could think could help everyone in this room, partner up with someone that's done it. A good person. Okay? A good person. Someone you have trust. You know, in commercial, we take on a major project, we can't get the funding, we take a sponsor and we give up 25% of our commission or 25% of our profits. But we get sponsored. Find local sponsors. So find friends that will sponsor your objectives of investing. Okay? But you got to be insanely crazy. You got to work. There's a lot of competition. But I will tell you that if you grind, you're going to make money. I know people in this club that are making $7, $10 million a year. Now, I'm going to ask you a question. Why is that not you? Why is everyone not making $7, $10 million a year? By the way, some of these people just started 10 years ago, like myself. So the question is, why not me? Why not you? It takes the commitment. It takes the grind, all right? Pick a market. It's very hard to be all over the place. You know, pick your own backyard. When I first got in this business, I used to travel. I was also 20 years younger too, so, you know, traveling wasn't a big thing for me. But today, it's a little bit, you know, uncomfortable to be traveling 4 hours one way and 4 hours back, okay? I say that because for everything you need a team. Let's just take the hard part out, which is finding the deal and closing the deal. But then you need a team that's going to do your rehab. You need your demo guy. You need your plumber. You need your electrician. You know, you need all your trade guys. So you got to be on top of your projects. And the second tip I'm going to give you is just pick a product, man, and start small. Start with whatever your budget is. Because that small investment is going to help you scale or bump to the next investment, right? Because as the market continues to grow, eventually maybe you sell it, you take that money and you step it up to a larger investment. Our position right now in the market is very different than it was 10 years because the market changes. So we're basically buy and hold. For many reasons. One is because you have a short-term gain, so people that like to flip owe 20% of their profits on their taxes. And don't cheat the government. Eventually they'll catch up. Okay? So if you are in the flip business and you're doing short-term deals, you buy, you flip, you're going to pay 20% of that profit. Long-term, year later, you'll pay 10%. And of course, if you do it through self-directed, you're going to pay 0. Pretty cool deal, right? Yeah. So start small. Start with a small investment. Start in your own backyard. Get the feel of the contractors. Get the feel of the trade, what it is to schedule calls. Okay? Don't have the money? I already told you. Partner up with somebody. We're lenders as well. You know, you give us a call. You know, we're not that picky. Of course, in our own backyard, because we know our own backyard pretty well. We have done deals outside of Florida, but right now we don't have to. Florida is the Mecca of the world. And I don't say that myself, but all the statistics show that over 1,100 people are moving to Florida. There's a reason for that, guys. The geopolitical landscape, it has changed. Okay? You can't expect my client that owns 600,000 square feet in New York to pay you $10 million in taxes if you can't let him open up his business. I mean, this bizarre thing now in Chicago that if you let someone or your kids go to college, this is all new to me, but I'm going to extend on that you are mandatorily have to give your one-bedroom apartment, your two-bedroom apartment, or three-bedroom house to an immigrant, by the way, which has not been qualified or has not been vetted by the U.S. government, at least not on this immigration law, okay? So you're going to have a criminal living with you in Chicago. I don't know about you guys, but that's not going to happen for me. All right? And I don't know what was the other crazy, insanely rule that he was mentioning? One was the apartments or... Oh, you can't foreclose. You can't foreclose if there's a tax lien, if you're behind your taxes. All right, so listen, you've heard some really crazy things here. Let me tell you something. I'm in the private equity world, and I own a private equity firm. Not only myself, but the big boys are not buying anywhere that's a blue state. Even if they're buying the doors at $5,000 a door. So let me say this again. No large equity private firm, nobody is buying in any blue state because how radically the thinking is at the government level today. So stay in the red states. And Florida is the #1 in the entire country. Okay? Our landscaping changed here about 2-3 years ago, I guess like post-COVID. And I'll tell you what really changed the landscape here, because we've always had a lot of trade here of foreign nationals from Latin America. The Russians got into the market here. But there was a restaurant that kind of proved to me that the landscaping changed. Has anybody heard of Sexy Fish in downtown Miami? All right, so Sexy Fish, there's only one, and it's in London. It's an exuberant restaurant experience. Okay? When these big players in the world go out and say, hey, we want to go into an American market, Miami's the last place they want to come because we weren't sexy. We didn't have museums. We didn't have art, culture, culinary, you know? But when COVID hit and these guys made a move, they didn't go to New York, they did not go to Chicago, and they didn't go to California. They picked Miami. Anyhow, these guys dropped $400 million to build a restaurant, including their art. I don't know about you guys. That's a lot of money in a restaurant. Okay? The second big acquisitions that the Arabs did, they bought the vacant land in Surfside that collapsed and killed 190 people. 98? 198, thank you. Yeah, there's a lot of players here. The Arabs said, we want the property. So they wrote a check for $100 million more. So the money's here today. All of the Asian market wants to come here today. By the way, we also do EB5s. All right? I'm telling you, this is the best market in the world today. And all the money is here today. And yeah, there's opportunities out there, but this is a great one.